Hello and welcome back to Core Finance. I'm Matt Brown. I'm joined by Shaun Richards, who is from Not a Yes Man Economics. And, well, over the last decade, when I used to trade, and come the summer, it used to be Greece. And all the fear that ran through the market, Greece, they were going to default. We were waiting for the next EU bailout, and there we were. And that seems to be kind of a common theme over the summers gone by. Move on now to 2017, and it's not as on the top of the agenda as it used to be. However, the problems haven't gone away.
No,
they're still there. And so where are we now at with Greece? The can's been kicked down the road, but are we catching up with that can?
in some respects we are. You see, there's several ways of looking at this. There's been sort of two positive ways put forward. Let me put forward mine, and then one I saw on Bloomberg. It's actually very separate. If you look at the current account figures for Greece, and the reason why I'm looking at this is, if we just ignore what has happened, the way that the IMF, the International Monetary Fund, used to operate before this phase was it was an organisation for dealing with trade deficits. It would step into a country, and the various things it would come through would be reform, austerity, the modern word for what it used to do. But then we get the awkward bit, devaluation or depreciation, yes. Which of course for Greece, the euro was unacceptable, particularly for the French leaders of the IMF. And so we've seen a different course taken. And yet now, just if we look at the recent figures, so this year's current account numbers, Greece seems to be roughly level. Probably a bit flattered at the minute because we're seeing the summer figures. Tourism's a big game for it. And here's some good news. The tourism figures are good. It's had a good year for it. Interestingly, a lot more Germans are going because people are afraid whether a German could go to Greece, let alone quite a few. And we're going more, which is slightly curious in the EU leave thing, lower pound and that. Big boost in the amount of money coming from UK tourists. So that side of it, on the old era thing, you'd think now, well, okay, maybe we're getting somewhere. But then of course we have the problem of timing here, which is that it is so many years down the road. And the people that rubbish, those like me that suggested the old thing, devalue, change, get out of it, have now had all these years where they've completely taken the economy down. Quarterly economic output, 63 billion, beginning in 2008, 46 billion now. So that's a depression in anyone's language. And so this is the thing, even the good news comes with the thing of what took you so long. And it's not really particularly growing very fast right now. But especially when you allow for the fact that euro is actually doing quite well. 2017 will be a good year, and yet the Greek economy has edged forwards, if that. So that's one side of the thing. The next thing is the Bloomberg view, which I said was a positive, that rather oddly seems to think that Greece deserves respect because it could now issue some bonds and yields have fallen through the years. Now, there's various holes in that. One is that there's so few Greek bonds about. Why? Because all the money's come in from its European creditors. Who have also acquired some of the bonds from the East European Central Bank had, so that holds so many. So that's a bit of a illusory market. Then the next catch is that if you look at it like that and it's such a gain, how can it be? Because Greece can fund itself so cheaply now via the European route. Why would it want to issue its own bonds more expensively? Well, it's back to the old argument of getting out of austerity, isn't it? So it's sort of a backdoor way of coming back to my argument. Except, of course, the catch would be it would still be in the euro. So, in many respects, a loser all round. I'm not quite sure how people are saying that as an advantage. But coming back to the fundamental position, which is a human one, think of the suffering. Youth unemployment rate still 42.8%, and now incredible. The times are supposed to be better.
Yes.
We're facing possibility here that people will always be unemployed. There's a sort of whole unemployed generation going through the system. And there just had to be a better way than that. And I'm still not clear that there's a way out here. Because how many years of growth would you require to get things back to some sort of what would require stability, or even back to where it was before? So there's big issues here. It's basically been covered up to some extent or put to one side by the amount of money and debt that's been poured in. But of course this creates its own problem. When you have an enormous burden like that, you end up back in the situation that you have to offer it so cheaply, otherwise it's unviable. But the question is, how do you get out of that? And that's the real problem.
And with regards to Greece, and it was on the brink, and as I mentioned at the start of the interview, we saw this happen quite a lot, and the IMF stepped in, EU stepped in. Can Greece go to the brink again, and what will happen at that stage? I mean, certainly, I think alarm bells will be ringing with the idea of them issuing new bonds, and I'm sure a few hedge fund managers would be rubbing their hands if they did to be short of them. In the coming years, will Greece become a bigger problem, and could we see contagion as we almost did a few years ago?
Well, I think that to some extent, for the sort of wider euro area, some of the contagion routes have been shut down, and the fact that there is a European stability mechanism, now you could argue that's the wrong name, but anyway, there is a route by which they could pour money in and not find themselves in the situation in 2010, 2011 when they didn't really know what to do. And those that can remember back then to when the ESM was called the EFSF, European Financial Stability Facility, that got there in the end, excuse me, which really was anything but overcharged Greece, ran round on all sorts of ideas, and then sort of U-turned on all that, but by then it was too late. So that sort of scenario is unlikely now, as that some of the things have been worked through. But the answer to the sort of two real questions here, I think, is how do you stop pouring money in? And two, and in many ways more importantly, because it would solve the first one, how do you get the Greek economy doing well again? If you can't do it in a good phase, sooner or later we'll see a recession again, sort of around Europe, UK, States, wherever. And then what will Greece do?
Well, certainly Mario Draghi, I mean, from the ECB point of view, if they're rolling back on QE, maybe they could look to some infrastructure projects to try and get this unemployment rate down in Greece. Would that be an idea, or would that annoy the likes of Italy and Portugal of Europe?
There's supposed to be what was called the Juncker plan from a couple of years ago, wasn't there, where he wasn't going to put very much in, and then this was another of these schemes where you'd have a sort of balloon of money outside, only a little bit put in, and I think something like 20 billion euros would go to 315 billion. It was approximately that sort of thing anyway. I can't remember the exact number he was planning to put in. Well, where's that gone? You'd have thought that an ideal case where it'd be easy to get things to work would be Greece, wouldn't it? It'd be one of the places you'd start, be in southern Europe. So, we're back to that issue. And this is a thing, of course, way beyond Greece's borders, that politicians say all sorts of things. The trouble is reality to what actually happens is much less. There's also the European Investment Bank. If you follow its Twitter feed, as I do, that's investing all around the world, rather oddly for the title European. But you'd think that there'd be lots of cases, wouldn't you? Starting in Greece for a start, and then Portugal and Italy and so on.
Understood. Well, I'm sure the Greek issue will not go away on the Greek question. But in the meantime, Shaun Richards, thank you very much for joining us.
Thank you.